Ali.
This is the Investor Tribe Podcast.
Late night grind, got the cash in the flow. Flipping these dreams with the portfolio grow. Brick by brick, stacking wealth in the zone. Investor Tribe, Obs, where the hustle is home.
Money, 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 money.
Really? We're going to start off like that?
We are, because we have John Rickert here.
Well, you know what? You're absolutely right. And it's not John Rickert's. It's Where's My Money, John Rickert. That's a whole
Show
different...
me the money.
John it's Show Me the Money, John Rickert?
He's the funding master.
So John, how would you like to be? Is it Big Money, John? You know, like kind of help us.
Dollar bills, y'all.
It's dollar bills. As a matter of fact, John has so much money, he was carried here. He didn't drive here. He was carried here. And I don't know where those guys went. It's the same guys that the same guys that got Diddy and Cheesecake. But they carried this guy. Remember that show, that skit, when he was walking on their back? He was on their back. That's how much money John has.
Well, he does a lot of funding. I think he says he's broken some records. Four of the best months he's ever had. Recently, so there's a lot of funding, a lot of lending,
a lot of
DSCR loans, investor loans, homeowner loans. So he does it all at Southwest Funding. So we're fortunate to have him back again, a repeat guest.
I'm happy to be here.
Yes. You know what? You should just live here with us.
I wouldn't mind. I like hanging out with you all. I'll come back anytime.
We got a lot of space.
Yeah, just kind of hang out with us. One thing about real estate is that everyone is always looking for money.
Oh yeah.
And
cash is king.
It is, and so we, it's kind of amazing. So the way that we even met was on recommendation from one of the agents in the office at Keller Williams, Sarah Legaspi. Shout out to Sarah Legaspi.
Sarah's awesome.
Yes, she is. And so she introduced me to two amazing people. One, she, I'm so grateful to have like Rachel in my life. So she was here with the ground level, like when you were.
Yeah.
So before we had a podcast, we had a panel, right? We were kind of talking about that a little bit, and how that introduction turned into, oh wow, I have a new resource in my life. Mm-hmm. I got somebody that I can trust. I got somebody that'll hang. I got somebody that'll do all the cool things and write a lot of cool loans and solve problems, right? So that's kind of the genesis of the relationship. And so, however, we only met maybe a couple years ago, right?
Yeah.
But you're 17 years in.
Yeah, man.
So and over $500 million funded.
Yeah. So we're not sure the exact numbers because the first couple of years I don't have records of, but we could kind of estimate based on some year-end awards to add it all up. So just trying to keep it going.
Wow.
So you're the branch manager at Southwest Funding.
Right.
So you've done over $500 million. This is as of today. It's probably growing every day, every month.
Hopefully keep going that way.
Keep going up. And I guess what do you enjoy most about lending and helping other people?
So I've got a couple of people that have really become really, really, really good friends. Like I met this woman at the Home Builders Association thing. She's an older lady. Her name is Denise. Shout out Denise if you end up seeing this. I love her to death. She has been such a productive person for me, not just in the way of referring people, because somehow she has gotten every member of her family and her extended family and her extended family's family to come do a loan with me. It's almost sacrilegious in their family to not talk to me about a loan. They treat me like one of their own. I mean, we text each other Merry Christmas and Happy Birthday, and we're friends, right? Like it's not a loan officer helping somebody, which I am doing, but I look forward to having those every so often. Once a quarter, we have an hour-long phone call. We just kind of talk. Something gets us on the phone together because I'm doing a deal with her niece or whatever. And honestly, man, that's really cool, especially when you see that person being successful because of some of the advice you gave them. It's a very open, mutual exchange. I love it.
It's really interesting that you even share that. What I find in my business as a realtor, that your friends won't become your clients, yet your clients will become your friends.
Yeah, that is a strange reality of it, but I think that comes from an honest place most of the time.
Mm-hmm.
I think a lot of times people may have things in their life that they've assumed about somebody else, right? And therefore project, hey, I don't maybe want them to see my financial situation this in depth because I'll feel like they may be higher up than me or maybe more prepared than me or something along those lines.
You think you may, not that you're going to come across judgmental, but you think that may be the energy that they'll get from someone that's in that position?
That they're concerned, or maybe that they don't live up to my other clientele, right? I've had several friends of mine, especially the younger ones, that they call and they kind of start with like, hey, I know I'm probably not worth your time yet. I hope I can be. And I'm like, what are you talking about? Like, what do you even mean? And if you kind of dig into that, a lot of them, especially the younger people, they don't feel like it's worth a professional's time to talk to them because maybe their loan isn't big enough or maybe because their deal isn't big enough because everybody knows we're all paid on commission, right? And if I've had several people say, hey, I saw you in this group, I know you're probably too busy to talk to me. And I'm like, no, you're the type of person I want to talk to, right? You seem very respectful, very open. Talk to me. What's up? Let's have a conversation. But I think younger or newer people, especially when they're approaching somebody that they see as professional and maybe successful, rightfully are humbling themselves, but maybe too much to the point where they're kind of scared to approach. If that makes sense. Am I explaining it right?
Yeah. No, I'm with you because I'm in this every day, right? And getting people, and I refer people to you, and getting them to actually move forward is a challenge.
Yeah.
The move forward. You'll call me back and say, hey, they have the application. That's all you do. And a week later, you're like, hey, they have the application.
Right? Well, I think, for us, we do it every day. So we get a little bit numb to it. And I think for them, they do it every 5-7 years, right? And on top of that, it's generally the biggest financial transaction of their entire life. Almost every person's home purchase until their last is the biggest single purchase they make in their entire lifetime. And to be honest, if you're not a little bit scared by that, you may not be breathing, bud. That's a scary scenario for anybody, right? But I think that's where it comes from. And I think when people are scared or a little nervous, they tend to act a little out of character, or a little bit more reclusive, especially in front of their friends, because they don't want to stumble in front of you and then have to go to the kid's birthday party and eat Cheetos with you while the kids are swimming and feel that shame again repetitively, right? So the best thing we can do is just to be as open as possible and say, listen, we've seen every scenario known to mankind, right? A 400 credit score doesn't even make me flinch anymore, right? Somebody with a $50,000 house doesn't make me flinch, whether it's $2 million or anything else. We're just kind of seeing it all. We're open arms to it. Feel free to talk to us. If you're not comfortable, I understand why, especially if you're a close friend, but you can't.
Are you sick of living paycheck to paycheck? So was I. That's one of the main reasons we started the Investor Tribe. We want to encourage you to join where you can learn, you can find deals, you can fund those deals. There's community and so much more. We want you to skip the guesswork, join the tribe. Go to imbtribe.com today.
I'll tell you, I had a situation where the banker was like, called me and said, hey, your credit score is about 705, and it was almost like he was calling me to tell me that a funeral was taking place on next Tuesday.
Yeah.
And what that would make you feel.
Right.
What that would make you feel.
Mm-hmm.
As a person, you're just like, okay, you think you did good.
Right.
You think you're on the right track. There's some other things going on. None of us are perfect. I even had clients that was like, when I told, I was saying, look, most, buyers that are buying, at least a couple of years ago, at least was all mostly within the low 700 credit score range, right? And they were like, oh, that low? It was like a look of disgust. And I was thinking to myself, like, well, I appreciate, but you clearly don't hang out with average people, regular people.
It's and people's credit scores go up and down. We see it all. We're
especially when you're investors. Oh my gosh.
Oh yeah. Well, what people don't understand is, and this is just one simple credit advice tip. Your credit utilization ratio is usually about 30% of your overall score, depending on what bureau it is. And let's say you have one credit card with $1,000 limit, and you go about to spend $900 at Lowe's. You're not crazily in debt. You're not going to go bankrupt, but your credit score is going to drop 30 to 40 points because the credit is a robot. It doesn't know any better, and it looks to the system like you're maxed out. So I'm very used to seeing swings of credit scores. Again, a 400 credit score won't make me flinch. We just closed a 424 credit for a VA person.
Wow.
Obviously, there needs to be good reasons as to why. This person had a medical scenario, right? We could see that at the beginning of the medical scenario is when the problems began, and then from when the end of the medical scenario ended, his problems started to clear. It was also clear that this loan would improve that. So I just displayed that to the VA. The VA has no minimum credit score at all. And the VA was like, you know what? He meets the other residual income requirements. Full send.
But you as a broker removed a lot of your overlays.
Absolutely. Well, I went to lenders that don't have those overlays because a lot of people don't understand how specific banks are. Certain banks may love a high credit score 780 conventional loan, and then some banks may specialize in a 620 FHA, right? And they will pay more for them, or they will give better deals to get those loans that fit their portfolio the tightest. No different than you have a certain buy box for the real estate you want.
Right.
They have buy boxes for loans and therefore have better pricing according to it. I know which lenders like which scenarios and where to put that 400 VA client, because that 400 VA client does not need to be with a high credit score conventional lender. They're going to laugh at me, right? With the lender I sent it to, they literally said, can you have them write a letter, explain it in detail, get all of our dates lined up, make sure it makes chronological sense, and show us where he started and where he ended and why we should logically believe this loan will continue to improve. Wrote a 3-page letter, got it signed off on. Everything else was a normal loan from there.
And for the investors or individuals that may not know their credit score, is there a good website you can go and get a free credit report once a year, or what do you recommend people check their credits at?
So you can check them in a lot of places. Annualcreditreport.com is the one that's provided by the federal government for free. That is the actual bureaus. It will not provide you a score, but it will provide you the report so that you can check the data that is correct. Okay. You can go to several other sites like Equifax or Credit Karma or I can't think of any others offhand, but that will give you a soft score. The only thing I'd caution with those soft scores, most commonly there's something called a Vantage 3.0 credit score. This isn't bad, it's just a different algorithm than most lenders use to qualify you. So you'll commonly find that those credit scores you pull online are a little bit higher than what the lenders pull from my side, because I'm not pulling a Vantage 3.0, I'm pulling a Tri-Merge FICO. And they just score the people slightly differently, but ultimately the data is usually about the same.
Yeah. Speaking about data, you're getting ready, you want to get your credit score together, you want to know what you're dealing with. It's good to get pre-approved for a loan or know what you can afford, but also, when you're ready to flip the first house and finally flip the right way, create the energy, engage the talent, own the results, be the CEO. Visit flipsavvycourse.com to register and start building your path to real estate wealth.
And there's something unique about working in Louisville, of all places, right? And what do you find that is interesting about, because I know you've seen it all. Last time you were on the podcast, we were talking about house hacking, and we were talking about the many entry points, and I'm sure you've experienced. That was a hilarious. Go back to that pod right there. Go find that podcast. I mean, you can find our podcast on YouTube, Instagram, Facebook, X, and also we're on iHeartRadio and Spotify. Go back to that podcast. You'll find it. You'll love it. It's about it's about
links are in the right corner.
Yes, thank you so much.
Right.
And so right, I know
That's
right.
the left.
Oh, there.
The left is over there.
All right, you're right. Okay.
Right.
One of those
It's
sides.
all right. It's so
The link is
basically
somewhere.
Down there.
Right. It's so basically when you were when you're finding yourself from year 2 to 3 to year 17, what have you noticed that has evolved or changed or something that has come into the mix? It could be a product. It could be about yourself. It could be what you're capable. Like, okay, you didn't know what you were capable of then. Now you know. I mean, just kind of give us an overview of
I
that.
think it's that last one, what I didn't know, or I didn't know what I was capable of because I didn't understand leverage and I didn't understand compounding returns. I came into the game with the what I'll call the Dave Ramsey mentality of I'm going to house hack this. I'm going to use that extra money to pay down this house, pay it off, and then save $900 a month. Well, I did that, and I sat there and waited to receive $900. And then I realized, I was like, this is painstakingly slow. This $900 is never going to grow into anything I can do anything with. And I was already a loan officer at that point, but I was writing just standard 30-year fixed conventional notes. I was still in my first year and a half, so I was still kind of being partnered with a more senior banker. I wasn't developing my own ideas, but this is one of my big ones, when I realized that leveraging the properties I own was just exponential compounding results, right? I paid that house off, and I basically went and got a loan on it. When I took that loan out against the house, I used it to buy more, and the rest is history, as they say.
That is awesome.
And I know, leverage, some investors used to think it was a dirty word, but now you can really scale the business, you can get multiple properties, now you have depreciation, you've got multiple income streams, you've got appreciation, hopefully on some of those properties eventually. Eventually. And sometimes it happens quickly, sometimes it takes a long road, or sometimes it happens you don't realize it's happening until you go to sell, or you look up, or you get an alert on Zillow, this house is worth twice as much as I paid for it.
Mm-hmm.
It's pretty good. And if you got one, that's pretty good. If you got 10, 20, 30, it's great. It really builds up over time.
Oh, I don't want to knock on wood because of the microphone, but I'll tell you, I've got one that I picked up that wasn't my favorite deal of all time, but it wasn't a bad one. I paid well for it, and it was one of the few that I didn't put a lot of work into, so there wasn't a lot of ARV gap. But I had somebody that I knew wanted to rent the place that I figured would stay forever. The dude has been in that house for so long, I kind of forgot it exists. He has his check sent on auto payment from the bank. And he's one of those old men that's like, you leave me alone, I leave you alone, don't call me, I won't call you, I'll fix it if you just don't bother me. And I forgot entirely about it, kind of like you were talking about. I went to go look at it, and I'm like, just updating some records, and I go in, and I'm like, this thing's like 30% value, and this dude hasn't missed a single payment. I haven't made one phone call in this house. I'm like, all right, I'm not mad anymore. This is a much better purchase.
It's a good day.
It's a good day. Right. It's really cool.
Running a small business is hard. You shouldn't have to be an editor, a marketer, a brand ambassador, a videographer. We have, fortunately, Bespoke Marketing that does that work for us. You can reach them at bespokemarketing.org. Bespoke Marketing, connections tailor-made.
It seems like you are still evolving, right? And so what you're capable of, but kind of talk about a product that you kind of seen evolve, because the tools that you used, I would say 15 years ago, are totally different than some of the tools you use today.
Yeah, I mean, I've definitely gone into the DSCR lending or cash flow loans way heavier now. When I first started, I was using FHA or conventional to buy the houses, right? And I was moving into them myself in order to make them palatable. It's really the only way to figure out how to do it. And then conventional, once you own enough houses, either your tax returns are going to look a little rough because of all the write-offs that you typically have access to, or even if they don't, conventional is going to start putting the brakes on you because a lot of them don't want to lend you more than a certain number of loans under conventional standard. Depending on the lender, it's up to 10. So you're not going to have more than 10 conventional loans for any reason, right? So you kind of find yourself stuck. and you still want a product that is going to preferably perform like a 30-year fixed. You know, a lot of these banks, they want to put you on a 520, which is a fine loan, but since it's a 20-year fixed, it shortens up your cash flow. And since it's a 5-year fixed, it becomes adjustable, which means you're inevitably either going to have to refinance and pay more closing costs or ride the market wave, right? DSCR kind of fills that gap, and more importantly for me is they're private. You can close them in an LLC or in a trust, right? And therefore, whatever people see on record is your LLC's information, not your personal information, right? Whereas with conventional, you have to close them in your name, and then people would quick transfer them to, or quickly need them to their business, and that's fine. However, A, that can be visible in public record, and B, for some lenders, that may trigger the due on demand clause because you've technically sold it to an entity that is no longer you, and you probably signed an affidavit saying you wouldn't do that at closing. So the DSCR solves all those problems because you can give unlimited amounts of loans that way. You can put them in your business's name and not yours. You can have a 30-year fix that's not a 20-year or a 5-year adjustable. The only real downside to them is the closing costs are a little heavier, and they do have prepayment penalties. But if you're buying these houses for the long term, which is what we're kind of talking about here, is right, buying something to keep it for a long period of time, ride this out. The one downside is the prepayment penalty, and that won't affect you unless you sell the house.
And you're using.
And what period is that? Is it a 5-year?
Yeah, I'm sorry, say again?
Is that 5-year? I'm sorry. The prepayment penalty.
It can be whatever you want. It's all about. I can adjust
okay.
it based on whatever somebody wants. The lower the prepayment penalty, the higher the upfront fees are going to be. But we can adjust it down to as low as 6 months if you really want to be out of something. And what a lot of people do is they'll go get a flip loan, a fix and flip, or hard money of some sort. They'll go buy a house and they'll repair it. They'll buy it for $100,000. They'll put 50 in it, and now it's worth $210. Well, I can refinance that house basically as soon as it's finished and has a tenant in it. Give them that $150 back, and they can pay off the hard money loan and the initial purchase price and have none of their own dollars in it.
And I did that loan with you, and so that was a really cool idea. I ended up selling the property, so I had to, darn it, shouldn't have sold the property, but it was a phenomenal deal. You did the loan; it was seamless, and we just kind of did our thing.
Well, and if you execute it right, you're going to do it again and again and again because effectively you're acquiring property with almost no capital involved, right? And you're acquiring property that the lender requires to cash flow. So if it's going to cash flow enough for a lender and you're not putting any money into it, your acquisition cost is very literally zero, and you have an asset that is going to pay down its own debt, provide some tax sheltering for you. It's going to appreciate in value, potentially provide some cash flow, and if you did it right, you'll have some equity capture on the front end that you didn't pay for. I mean, I'm not saying there's not better ideas. There's not one that I can repeat this frequently, this easily.
With little to no money out of pocket, sometimes once you're done with the process. So,
Right.
Yeah, you can do it.
It doesn't happen often. I had a lender hit a home run on one, and he took about 6 months to get it done. He flipped it so well, though, I was able to give him $15,000 more than what he started with on the property, and he now owns a property that somebody else is paying for. I mean, again, it's not every scenario, but that does happen.
Walk us through the process of, because you work with every matter of buyer, whether we're talking about first time, second time, investor.
Yeah.
Walk us through the first time investor, because that's what we want here at the Tribe, is to bring people into the experience of owning property that can actually cash flow and build wealth for you and your family. Right?
Yeah.
So what to expect.
Yeah, so they can know what to expect when they call you and they're like, okay, so there's just not, you're not some big hairy monster that's like here to judge them for whatever's going on in their lives. But you're walk me through what that process looks like.
So the first question I ask everybody is, what's your goal?
Right.
Like, what are you here trying to accomplish, and why are you doing it? If I can get to the why, which is usually the meat and the potatoes, what's really going on is the why, not the want. Then I can kind of learn how I can drive this car, because every person moves differently, and finances are very psychological. I tend to gauge my advice based on how I think the person's going to receive it best and their goals, right? But once we go through that, I'm going to start asking them some basic questions about what I call the 3 C's of mortgages: their credit, their collateral, and their capacity, right? What's your credit situation currently like? What's going on with it? What's your score? Are you delinquent on things? How are your mortgages looking? Just generally run me down on your credit, right? Then we're going to talk about their collateral. What type of collateral is this person trying to work with? Are they trying to do fix and flips? Are they trying to buy a turnkey? If so, what are the standards for that type of collateral, right? If it's a fix and flip, do they need 10% down of the purchase price and we'll fund the whole rehab for them? Maybe. That could probably work out. Or is it buying turnkey and they need at least 15% down because of the property type? That's also possible. So we'll kind of run through the collateral and the required options. And then last is we're going to talk about capacity. And capacity is how they're going to basically pay this bill and their other bills and keep on running, right? For debt service loans, we look at it based on the rent versus the expected cash flow. It's really simple. We don't look at their personal income. That's one of the huge benefits of doing a DSCR is I'm not going to look at your tax returns, your W-2s, or your pay stubs. I'm just going to say, is the rent $1,000? Okay, as long as the payment's $9.99 or less, you're approved. Congrats. Have fun. If it's a more conventional loan style that they're looking for, then we are going to grab some tax returns and some income and look at their income and see how much money they're making versus how much they're going to spend after they own the house. Once you kind of establish those 3 things, I'll kind of say, hey guys, here are your options, right? What makes most sense for you based on what I've told you so far, and kind of let them lead themselves based on what's available. I don't ever want to tell somebody what to do, but I really want to paint a very clear picture of if you go left, it looks like this. If you go right, it looks like this. I personally don't care. I get paid the same no matter what loan you pick. But if your goal is long-term holds, please turn right. You know what I mean?
I definitely love that. And so, it's amazing how you've been able to do that. And that's how in kids, that's how you fund almost $500 million in loans, right? and going up, right? And so it's super cool that we have John Rickert here as a branch manager at Southwest Funding. And he's lived and worked in the community for years, and nothing matters more to him than helping his neighbors and friends and different people achieve their dream of home ownership, along with investorship and being a member of the tribe, right? Whether you're buying, refinancing, or just exploring your options, he's here to serve you with honesty, local expertise, and a heart for the community. So, you guys can build something great together. Give him a call, 502-517-2192.
Or 502-417-2192 is a better number for him.
I got the number wrong.
But just barely, just
barely.
Yeah,
Well,
barely.
that matters.
But he won't.
That matters in his business.
It does.
You know what I'm saying?
Hey there, it's Scott Piniella. If you want to stay ahead of the curve and invest in your future, join me this Wednesday at 1 p.m. on the Investor Tribe podcast.
So what we want to do is really, we want to thank you for coming out again.
Yeah, I love
Right,
it. It's
and
fun.
so this is cool. Like, this is the 3rd time you've been on here, and you're probably, what we're gonna do is probably have a chair. Now we need to probably figure out how we're gonna have, like 3-time guests. Do you get a jacket, or is that 5 times?
I want one of the director's chairs. You know the ones on the movie sets?
Okay. Now he's getting a little ahead of himself. You know what I'm saying? He wants your seat.
It won't have a couple. It won't have a bottle holder.
Right.
It won't have my name on it. You'll also have you named. Mine will be like an unnamed guest chair.
So
We got that important.
You're right. So what we got to do is just have him. We give him a jacket.
Have you give him one?
Yeah.
Don't jacket me.
Yeah. You get the golden jacket when you've been on a podcast. You know what? We're gonna save that for people that have been on for maybe 5 to 7 times, or
We'll have to figure it out.
we gotta figure it out.
Hall of Fame,
So chat. What do you guys think? Like, should we have a jacket, or should we have something for get people that's been on our show. And if you want to be on a show, just kind of hit me up. I'm at Milton at invtribe.com, and Hampton
is at Hampton at invtribe.com. Also check us out. We're on Facebook, X, Twitter, Instagram, YouTube, iHeartRadio, should be Spotify as well. So we're dropping a new podcast at least once a week right now, possibly twice a week coming soon.
You get twice the Milton and twice the Hampton. And you'll get 3 times the John. See, there you go.
So check us out at invtribe.com.
So that's great. We want to thank you guys. We have a lot of things coming up in season 2. You're gonna love it. A lot of value for you. And I'm Milton Ali.
I'm Hampton Scurlock.
And we'll catch you on the flip side of the Investor Tribe.
The Investor Tribe podcast is brought to you by the Investor Tribe, all rights reserved, featuring Hampton Scurlock and Milton Ali, executive producer Drew Cookenmaster, produced and distributed by Bespoke.